And welcome back. It's JWalter here. Here's your latest housing market update. I hope you guys are having an awesome day, by the way. In today's video, I'm going to share a new report from Redfin. It was just published today at the time of this video. In this report, they stated that the share of home sellers reducing their asking prices is growing more and more each week. This is a sign that home buying demand is shifting as home sellers are adjusting to expectations for home buyers right now. So that's the topic of today's video. Hope you guys get a lot of value of today's video. Also, if you're looking for a real estate agent referral in your neck of the woods, whether you're looking to buy or sell a house, then check out homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. So with that said, let's go ahead and dive right into the video. It says home buyers regain some control as supply grows and demand pulls back. This was just published on the 2nd of June. It says here more than 1 in 5 home sellers dropped their listing prices. More on that here in just a little bit. May marked a turning point in this pandemic housing frenzy as buyers regained some control, keyword some control over this housing market. This limited sense of control comes at a great cost though, of course, because of 5% mortgage rates and of course, record high home prices as well. Meanwhile, pending home sales posted their largest annual decline since spring of 2020. This is the largest decline basically since May of 2020. Also, the Redfin Home Buying Demand Index declined 9% during the 4 weeks ending May 29th. This is an index based on a home showing requests for Redfin agents. They have a demand index for that. More on that here in just a little bit. Also, the number of houses for sale climbed to a new high for the year as well. And here's a really good quote here. It says, a growing share of home sellers are recognizing the new limits of their power. More than 1 in 5 dropped their asking prices, the highest rate since October of 2019. In regards to home price drops by home sellers, on average, 5% of homes for sale each week had a price drop. So overall, 20.1% dropped their asking prices in the past 4 weeks. That's actually up from 13.8% from 1 month ago, and also up from 10.1% from 1 year ago. So basically 1 year ago, 10% of all the home sellers dropped their asking prices, but that share has basically doubled because now we're currently at 20.1%, and this is the highest share since October of 2019. And here's a really good graphic I want to share with you guys because here's the percent of price drops, and this is the 4-week rolling average. So in other words, 5% of home sellers on average over the past 4 weeks per week have dropped their asking prices. So 5% on average this last week. However, over the last 4 weeks though, 20% dropped their asking prices. So have a look at this because I've been reporting to you guys basically over the last couple of months here regarding the increasing share of home sellers dropping their asking prices. So if you look at 2020, which is this gray line here, 2022 is this red line, the blue line is for 2021. More or less in January of each of these years, we had approximately 2% each week of home sellers dropping their asking prices. But as you can see here, really ever since April of this year, the share of price reductions this year has far surpassed 2020 as well as 2021. So right now we're at 5% on average per week. Compare that to 2020, it was just over 3%, but basically in 2021, obviously just 1 year ago, that share was only 2.5%. So basically right now we have approximately double the share of price reductions compared to 2021. And according to Redfin, the sudden surge in mortgage rates led to a sudden and significant cool down in the housing market in May. However, mortgage rates are now stabilizing. I actually have some new news regarding that because over the past 3 days, mortgage rates have been increasing greatly. So I'm going to be sharing some stats with you guys here in just a little bit here. In any case, it says homes remain in short supply. So while we do expect home price growth rates to decline, in other words, for home prices to still increase but not increase at levels we saw last year, for example, we don't expect prices to fall much at the national level though. For home buyers trying to determine the best timing this year, the main benefit of waiting is that there may be less competition as supply starts to build up. As I reported to you guys a few days ago, there's a lot of indicators right now that's telling us that home buying demand is decreasing and our housing market is basically shifting. So here's some more leading indicators of home buying activity according to Redfin here. It says fewer people are searching for houses for sale on Google. That's also something I mentioned as well, because when you go into Google Trends and look for homes for sale, the searches for that has been declining really ever since July of last year. Also, the seasonally adjusted Redfin Home Buying Demand Index, which of course is a measure of requests of home tours from Redfin agents, was down 9% year over year during the week ending May 29th. This is the most recent stats we have for you guys that was actually just posted today at the time of this video. This is also the 7th consecutive decline in this index. What I really like about this index here is that we don't see this for other brokerages. So when we look at Remax, Line Real Estate, Realty One Group, for example, they don't track the number of home showing requests by agents of their brokerage, but Redfin does. So for example, I'm a real estate agent with Realty One Group. If I was going to show, 10 houses one day and then 20 houses the next day, I'm not going to be reporting that to my broker. That's very true across all other brokerages as well. However, Redfin does track this data, which is really good to see because they take this data and formulate into an index. And this is basically a measure of requests of home tours, which is a great measure to see because we really want to see, are home buyers really putting the brakes on buying houses right now? Are they submitting less loan applications, for example? And also, are they requesting less home tours from other agents? So not only is Redfin sharing that they're getting fewer requests of home tours, we're also seeing the actual number of home tours decrease as well, according to two separate companies. So the first one I want to share with you guys is according to the National Association of Realtors in cooperation with Central Lock, which is a large lockbox company in the US. So they basically track the number of home showings by real estate agents across the United States. And the most recent data they have is actually for March 2022, and showings are actually down 19% compared to March of 2021. Also, according to showingtime.com, for data ending June 1st of 2022, this is actually updated just today, the number of home tours is actually decreasing greatly. As you can see here, for the week ending June 1st of 2022, we have a decrease of 11.1% of home tours compared to the first week of 2022. However, look at 2021. In 2021, at this time, we have an increase of 13.4% in the number of home tours compared to the first week of 2021. So ever since really May 28th, more or less, we have a decrease compared to the first week of 2022. We're basically in negative territory. When looking at 2021 compared to the first week of 2021, we went into negative territory beginning November 18th, which is very common because during the winter months, November and December, especially around the holidays, as you can see here, Thanksgiving down over 30%. And then Christmas week was down over 55%, almost 60% compared to the first week of 2021. So it's pretty remarkable that now we're basically in May, or we are in May, that right now we have negative home showing requests compared to the first week of this year, which is basically on par with November 24th of last year when home showing requests decreased by 13.3%. Now they have decreased by 11.1%. In any case, going back to this report from Redfin, mortgage purchase applications, this is according to the Mortgage Bankers Association, or the MBA, were down 14% compared to a year ago. I made a separate video regarding that a couple of days ago, and I actually have a note regarding this because besides the onset of this pandemic, the number of purchase applications hasn't been this low since December of 2018. Also, for the week ending June 1st of this year, the average 30-year fixed decreased slightly to 5.09%. This is according to Freddie Mac. It says mortgage rates continue to itch downward this week, but are still significantly higher than last year, affecting affordability and purchase demand. So again, the 30-year fixed, according to them, is 5.09%. However, what I don't like about their reports here from Freddie Mac is that these are weekly averages. So it really doesn't tell us the full picture here because they're stating that the average right now is 5.09%. As you can see here, it's been decreasing really ever since the middle of May. However, CNBC is reporting that mortgage rates have been increasing after 3 weeks of easing. And this is according to the Mortgage News Daily, a website I often report to you guys. So as you guys all know, ever since May 6th, mortgage rates have been decreasing, but look at this. It basically decreased through May 27th when we reached 5.25%. But as you can see here, for over the past 2 days though, mortgage rates increased approximately 25 basis points. And as of today, which is June 2nd, the average 30-year fix is at 5.45%. So going back to this report from Redfin, it says mortgage rates are now stabilizing, but that's basically old news. That's basically news from 3 days ago when mortgage rates basically were stabilizing when they were at 5.25%, but now rates are closer to 5.5% and not 5.09%. Also, according to Investopedia.com, as of today, the 30-year fix is averaging at 5.42%. So part of the reason why mortgage rates have been increasing over the past couple of days is because the yield on the 10-year US Treasury note has been increasing greatly as well. As you can see here on the 27th of May, the yield was at 2.74%, but as of today, the yield is just under 3%. And according to the Mortgage News Daily, of course, rates right now at 5.43%. That's an increase of 2.32 percentage points compared to 1 year ago. I mean, that's absolutely insane. 1 year ago, mortgage rates were averaging 3.11% for people with excellent credit. So comment below with your biggest takeaways from today's video. If you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you have an awesome day, and I look forward to seeing you on the next video.